Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we'll look at here is a chart of the market. We're going to look at the mini S&P 500 futures contract, front month in nature, for this, the 4th day of May. A couple of days ahead of Mother's Day, 4th day of May 2012. And looking at a pretty interesting Friday session we're having seen here. If you actually look, you can see these are proprietary indicators. Our intraday dynamics, as we often refer to them, and they kind of give us a gauge as to where the market's likely to head. Now, if you first look at the screen, obviously you're thinking red, sell, and that's exactly what the market has been doing, selling off. We had a bit of a choppy session. This, of course, is Friday, Thursday. Wednesday was kind of a flat day. The market's really we've been expecting a move in either direction. We've been informing our clients that we had monstrous and resistance around 1400 or so, and a potential lower high to be printed, which would send the bears running for the sell orders and the bulls running for the exits. And but we also had a monstrous amount of key trend following support resistance right around 1380 in the market. So it was really up to anyone's guess as to where the market was likely to head. But if you look at this graph right here, if you look at this chart, you can see that the likelihood was definitely favoring a bearish resolution, and that's exactly what we got. Having said that, we are still fully 100% fully and officially bullish on the market. Been bullish since about 11:30, unofficially 12:30. Officially, we're at around 1,400, almost 200 points for the trade officially, and almost 300 for the for the trade unofficially. We're just looking for opportunities to add to exposure. Looking for opportunities to add to exposure. We've not really seen those yet. In fact, we may start to scale back on some long exposure if the market continues to look this weak as it has today. But you know, that can change. Overall, again, we're fully bullish, but look at this. How can you even utter those words on a day where we've got extreme bearishness here, accelerating bearishness, accelerating bearishness, accelerating bearishness. So it's 1, 2, 3, 4, 5 measures. The trend is lower in the price technicals, so that's 7 out of 7 bearish measures. In terms of a free informational day trade, you definitely you don't want to be buying this. That is clear, but you could sell it. In fact, we'll go ahead and issue a 4 out of 5 star trade as a short setup right here at 1368.25. Now the market probably doesn't have that much room to go on the downside, but if selling accelerates, you can definitely get that quick pop to the downside and go ahead and book your gains if we get an acceleration momentum move to the downside. But 1368 to 1375 is essentially the sell zone, but you definitely want to stay in this trend. So we'll go ahead and call it 68 to 70 as the sell zone. Free informational day trade. Go ahead and target at least 5, 6, 7 points down to around 60 or so on this trade. But as you can see, all the forces are in alignment. The stars are in alignment for a continuation move lower on the intraday chart. Just take advantage of these little bounces that we're seeing. So we'll hopefully get this video out to you in time for you to take advantage of that trade and make yourself a quick $500 or $600 per contract with margin of $500 intraday. It's a pretty good return. So we're going to go ahead and minimize that. Looking at a chart of the daily market, this is our swing system 15.0. Not really in the best trade setup. It actually went long at the close yesterday, and we're pretty much underwater in this trade. But as you can see, we'll go ahead and pull up the strategy report. As you can see, over time, $175 pretty much is what you can guarantee every time you place a trade. There's a chart over the last 10 years or so, so not too bad. Not sure why that's stuck like that. So we'll go ahead and minimize that, but that's a swing system 15.0, and actually you can see winner, 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 chicken dinner, a lot of winners, one small loss. We're at a quick loss too, but having said that, this long, very nasty drawdown comes back for a winner. This long, very nasty drawdown, 2 days, comes back for a winner. And it's honestly what we particularly anticipate. What we're getting today is a sell-off based on an H&S formation, simple head and shoulders, particularly if you're looking at the Dow 30-minute. We'll look at that in a second. Particularly nasty sell-off that we're getting, but we have a favorable amount of support right here around 68 to 70 that we were talking about. Again, the informational day trade is certainly separate from the daily analysis of the market, but the 50 to 60 is monstrous support. We could get a swoon down there. Even today, we could expect a level of 60, but we definitely think we're going to bounce here. In fact, this is really just kind of a hybrid ET high level sell signal, which the high levels can be particularly reversed to nice moves higher. So we're still targeting 1500. We'll wait and see if we can get there. If the market again continues to act weak, then we'll go ahead and seek to scale out of our long-term bullish bias from officially 1230. The EVO, not really trading. You can see a declining H&S formation there. There's the head, shoulders, boom. You're getting a complete sell-off. The active, 3 nice winners in the TF, 1 loss. The EM, 4 winners and a loss. The 1.01 lot, not trading. MCM, not trading. So you definitely want to be able to pick your spots, and that's primarily what we do. Is pick our spots. We're going to go ahead and minimize this. Maybe we'll get to, there we go. So there's a daily chart, the chart that we look at each week, and as you can see, we are officially 20% bearish on the market. So I guess we're 100% bullish in our official timing, but the market is moving slowly to bearish. In fact, there's a 20% bearish bias, but you have overwhelming 80% bullishness. Actually that's kind of getting tested right there, from an intermediate measure. There's our unofficial buy signal 1130, official buy signal 1130, the beautiful move that we've seen higher. Momentum definitely rolling over, intermediate term neutral, as you can see there, in short term bearish. It's definitely hooked over from a directional movement perspective. Short term bearish is emerging, arguably short term neutrality, intermediate term neutrality to be sure. So this move is definitely starting to wane a little bit, but as you can see, there's clear and defined support right here at 1370 in the ES, and that's particularly where we are. Again, we could get a swoon just like we did here before we bounced back and based, and we get a swoon here before we rallied to a new recent high. But what's interesting is we did make a lower high with the continuation move today, Friday, following yesterday's move lower. This definitely prints a lower high, so that's kind of bearish. You had an H&S setup and now a lower high, so it's kind of bearish. So we're definitely going to wait and see how this market reacts. We're actually holding here at our key measure of intermediate term. This is kind of the main measure that we fall for our biases particularly, and so that's definitely holding. So this arguably is just a buy setup right here, and that's kind of how we're treating it, not as an I2, but definitely holding on to our full and official bullish bias. Our free system, again, not really trading from a sentiment perspective, in a contrarian perspective. We're definitely over 1. Every time we see a move over 1, we're definitely expecting a move higher. Just like we mentioned last time, we were right around here, and we a little bit of a choppiness, but we ultimately went higher. Kind of expecting the same thing Monday, Tuesday. Likely going to be turnaround Tuesday if the market's going to go higher. So maybe a little bit more choppiness and weakness as we go on through today, and it's about noon Eastern time as we go on to today, and on into Monday. We also expect a little bit of the choppiness to continue, but we always look for those turnaround Tuesdays, and that's very likely what's going to happen, particularly given this extreme level of fear, which is definitely healthy for the market, if the market and even the VIX is ticking up. So that's pretty impressive. You can trade this system if you'd like. Not sure what's, there we go. Trade the system if you like. There you go. Free of charge. All you have to do is have a valid account, an open account with one of the few of the nation's top options firms and options futures firms, and you have the option of trading this at no charge. 115,000, 18,000 max drawdown of 5 lots. You can of course just trade one of those, and you'll cut your drawdown by 5. MRSEM's in a beautiful short today. Loving every minute of the MRCM short. Look at that. Went against us a little bit, but we've got some long exposure, a couple lots on a swing basis from a tier 2 system, and this is definitely more than hedging that. Beautiful short. It's very nice to be hedged. That's why we always recommend never just trade a single system. Always have hedges, at least 5, 6. I think the smallest portfolio we do have some 5K portfolios, a couple systems, some dual day traders, but MSCI UDT 6 lots, Delta DTS 9 systems. So you definitely want to be as diversified as possible. $500 every time you place a trade. That's what you'll expect on the MRCM 90,000 over the last 10 years, the last decade. Just a $12,000 maximum historical drawdown. So pretty impressive is the MRCM. But again, a beautiful short setup we're seeing there. So we're going to go ahead and minimize that. And this is the aforementioned long exposure, the SM30 actually went long late in the day. And you saw that along with the Swing System 15.0. Both those were long, so it's beautiful to have the MRCM as a hedge. We're going to go ahead and switch over, start looking at this, see how we're doing. EVR3T, SR not really trading. There's that beautiful head and shoulders formation. EVR3 active, SR not trading. Active, huh? EVR3 filter not trading. We can actually R60F putting up a couple losses. But let's just take a gander, shall we, on how the system's actually done over the last decade. Not too bad. $70,000, $4,000 drawdown? Really? $70,000? Not too bad. Here we're looking at the $5,000 drawdown, $120,000 for the EVR3 filter, the EVR3 active, 7,900. So you're going to have more risk because it's going to be more active if you're one of those that likes to see trades. And the EVR3T just 40,000, but that's $40,000 with only a maximum drawdown of 4,000. So there's the VSR. EVR3 VSR, beautiful. We'll go ahead and switch back. We know all the equity curves, just simple sell there. MRCM PTL, not taking advantage of the short position, but definitely catching a beautiful long, catching that long that the MRCM did. So very nice. R30C, not really trading. Look at this head and shoulders. Is that the most defined H&S setup you've ever seen? It's unbelievable at 1400. Very round level of 1400. So we're probably we should make a lower high, higher low. Scratch that, reverse it. Higher low, 1360 should be good enough. I definitely think there's an outside shot to get that today, hence the informational day trade that we have, so we can kind of move along. So you can take advantage of that position. What an H&S setup, just uncanny. No trades for the B. Well, one long. Definitely caught a nice winner for the A, for the R30A. Beautiful winner. Absolutely beautiful. Catch the head. I mean, does the trading get any better than that? Actually, we're going to go ahead and look over now at something we have to talk about, which is what portfolio comprises these models. And there's a blank screen. There we go. Well, MB250 to start off. And actually, if you look, here's kind of an equity curve of the last decade of quite a few of the models. We'll look at a PR 100 in a second. But there you have the MB 250, which trades. Maybe we could. I'm not sure if we can do that. I guess we can. There we go. All right, continuing on. So the MB 250 trades essentially all of the platinum models that we've never released to the public. We've been trading. Now are released for you to be able to trade, and that is the Platinum Reserve 100, the MB 250. There's actually a $100,000 version of the MB. It's more an aggressive. It's more of an aggressive version. But this is the home page, and we've actually updated the returns, as you can see right there. MB 250 right there, PR 100, EVR 350. We can go ahead and click on the MB 250. And again, this serves as either the 100 or the 200. Now this, we just pulled that up. Trades. This is the PR100. There we go. So here is the MB250. This is essentially the equity graph that you just looked at, that you just saw on the website, and that is through the end of last month. So a couple of days ago, through April. We're now just into May, and there you can see this deducts after slippage and commission. We'll go ahead and perform its report. Actually be better viewing on the website. So you can see slippage and commission have been deducted over the last decade of $500,000 at least, actually $600,000, closer to $600,000 in slippage and commission have been deducted from this number to provide a real-world assessment of how the portfolio is likely to handle trade. And as you can see, we go over the systems and show you how they're trading every week. And so there's the maximum drawdown historically. Now that's $70,000 on a $250,000 account. Just 28% of that original equity has been the worst case scenario drawdown, $70,000 in absolute terms. As a percentage of total equity, the actual drawdown was just 12.3% of equity. So the account was around, let's say, $650,000 or so when it experienced that $70,000 drawdown. So it's not a bad portfolio. A decade, 1,258% absolute return after slippage and commissions, over $3 million. And what I was going to show you, here's kind of the returns annually, monthly. April, kind of a slow month, only made $400 in April. And here's kind of a daily look. So if you want to take a look at the daily, but what's interesting is we can actually go ahead and look. We'll bring that over. So we're right next to where we want to be at the market performance, and you can see all the systems that are traded: CBRs, DT 8.0, XEMDS is the XASLDE, System 1.0 EMD, the SL, the EVMCM, a few of the EVOs, EVR3 actives, Ts, filters, VS, the grind, ISR, ISRD, the MILTF, MRCM, MRCM PTL that we just looked at, R2K DT60, R30A, B, and C, R2K DT60 filtered, SS 15.0 we just looked at, VIX equity per call ratio we just looked at. That's actually a free model. So that essentially comprises this. So that's what you get if looking over the last 10 years. And of course these models have been ongoing in continuity for several years. These are not new models. These have been trading for years and years and tried and tested models. And so there you have it. So that's the MB250. We're going to go back and look over and so I'm not sure exactly how many. That's what we're getting at. How many contracts that is, but it's quite a few. And we'll look at the weight. We don't have the weight here, so I believe it's 1 per. So you're looking at about 30 contracts or so, and so 30 systems is going to be about $100 a month per system. So $3,000 a month, but you don't have to pay $3,000 a month. In fact, the regular price is just $39.99 a quarter. So $3,999 for 3 months, and it's actually on special for $28.88. It's actually absolutely unbelievable. The price, $28.88 for, let's say, 30 contracts a quarter. It's like $30 a system a month, and it's obviously an extremely robust portfolio. And I really am begrudging to say this, but yes, you can actually enter this promo code Save Big and save an extra 20% off of that. There, I'm done. $28.88, absolutely unbelievable, and take 20% off of that. It's just absolutely insane. And so that's $28.88 a quarter. I'm just going to say that, act like that didn't even exist. So $28.88 a quarter. It's $30 a month per system. And let's just take a look at the returns 400, yeah, $50,000, $60,000 over the last 3 months, and the fee was $28.88 to get that. It's pretty impressive. 100,000 last October is what these systems combined to net after slippage and commissions. Yeah, that's a pretty impressive reward to risk. And of course, your risk, these are month end, but $14,000 was the monthly drawdown, $6,000, $5,000, $17,000 in August of 10. So pretty impressive. And it kind of goes on that way too. The PR 100 right here is 1888, and you can save 20% off of that. It's just that's not going to last. That is not going to last. I can assure you that. So if you want to take advantage, that's going to be a very limited time. The 20% off will apply to these elite models, MB250, PR100, and EVR350. Pretty impressive. So you can actually go and look, and the same thing for the PR100 banks over the last decade as of a couple of days ago. April 30th, 12, $1.3 million. Worst case drawdown, 36% on the $100,000 portfolio, 15% of the total equity. Return is about 132% per year. And that's kind of what we shoot for, is 100 to 200% real returns. After slippage and commission for every single trade has been deducted, that's the number you're left over with, $1.4 million. And of course, this is all auto trading. For those of you who may be new watching or may have just been referred by a friend, it's very easy to get started. There's EVR 350. That's just a $50,000 portfolio. $1,288 for 3 months. I'm gonna go. You can go ahead and try this, but I'm gonna go. I think that's erroneous. I don't think the 20% savings applies to these. If it does, you're certainly welcome to it, but I don't think the 20% savings is gonna apply to those. Oh, we could test it out. Let's do that, shall we? EVR3 portfolio, $1,288. Well, it looks like it's already added, so it's 20% off. That's unbelievable. $1,000 for the EVR3 portfolio. Let's take a look at that. EVR3. Actually, we don't have. Might have that. Let's see. No. Well, there might be a way to look at that. If it were easy, everyone would do it. Here we go. Should be. There we go. I think that'll pop up. There we go. So there's EVR3, $464,000. And we were going to look at the drawdown. $20,000 drawdown. It's a $50,000 account. And $20,000 the maximum drawdown. And that trades up to 12 contracts. So 12 contracts, which each lot is $100 a month, it is just $1,288 a quarter. So it's not $1,200 a month for 12 contracts, $1,288 a quarter, so you can divide it by 3 and then save an extra 20% right now. So that's a very limited time offer. But anyway, so go ahead and add to cart, click subscribe, whatever you'd like. If you do 4 quarters or a year, you're going to get quite a few benefits. In fact, this you're going to save almost 25% on commissions, over 20% on commissions. You'll save an extra 10% on top of this 20%, so you'll save 30% on these already reduced rates, which are absolutely phenomenal rates. We can actually go and look. Let's look at the PR100. That was $1,888 per quarter, so it's probably 18 contracts. 24 contracts would be $2,400 a month. This is less than $2,400 a quarter, $1,800 a quarter, and you have savings on there, not only just 20% for now, obviously, but you will have 30% either way in doing the quarters if that gets changed in short order. 30% a quarter and save over 20%. I think this video has gone way overboard, had a lot to talk about. Again, setting was easy, just subscribe, check your email, follow the link, quick online application, answer a few questions, and then the broker handles everything, including the setup and oversight of your fully automated trading portfolio. If you guys have any questions, go to the website. You can chat for support right there. Shoot us an email to MiniAnalyst.com. Hope you've enjoyed the video, and we will see you next time.